Alright, hey guys, Scott here again with a brand new video, and so for this one, I'm going to show you guys, in my view, the best kinds of setups or situations to sell naked call options or call credit spreads, right? So both of these strategies basically do the same thing. They're both bearish in nature, right? You want the stock price to go down essentially, and they're also great for taking advantage of high implied volatility. And so in particular for this video, we're going to focus on an actual trade I made this morning here in First Solar. I basically sold a naked call option on the stock. And again, we're going to dive into all the charting here, and I'll be showing you everything that I look for when placing these kinds of trades. Now, briefly here before we dive in though, if you guys want to receive up to 13 free stocks where each stock could be worth up to $2,000, then make sure you watch until the end of the video. And then also, if you would like to join a very exclusive online community where you can learn how to trade options and my overall approach to the markets, then you can now join my options trading Discord as well. So definitely check out the video description below to learn a lot more about that. And then lastly here, for anybody who is also brand new to the channel, again, my name is Scott, and you can also find me on SKILLSHARE as well, where you can take my very detailed classes on options trading or stock market investing. And you will also find some links to a few of my introductory courses in the video description as well. So be sure to check them out. And when you join Skillshare using those links, you'll get a full 1 month free trial. All right, guys, so now we'll dive in here. And so like I said earlier, the call credit spread or the naked call option are best at taking advantage of two main things. Number one, a likely downside move in the stock price. And then number two here, high implied volatility for that stock. And so first up here, we're going to focus on finding potential setups where there is a decent chance of seeing a downside move, right? So in the case of First Solar here, which is a solar power company, we're going to change the time frame on this chart and we'll go to a 3-year weekly chart. And so I do apologize for some of the clutter here on my screen. These are basically just the orders and alerts I have set for my actual trade I made on this stock this morning. But basically, I want to direct your attention to this white ascending trend line right here, which, as you can see, goes back to the end of 2020, it looks like. And so for me, when it comes to finding potential setups where there's a good chance of a downside move, I use technical analysis mostly in the form of support and resistance and trend lines as well, right? So as you can see here in the grand scheme of things, this stock has been marching higher, although of course in a very volatile fashion, but so far the stock has definitely respected this ascending trend line, right? Where basically every time the stock has gone up to this price, it has been repelled off that and gone down significantly lower. And so fast forwarding to recent days, as you can see, this stock has just exploded higher pretty much 7 or 8 weeks in a row. And now once again, it has reached the underside of this trend line. Now, does this guarantee for certain that this stock will definitely come back down at this point? No. And that's because there are no guarantees in financial markets. But that being said, based on my experience, when a stock does reach a pretty obvious and significant resistance point, in this case here with this trend line, and if it does so especially very, very quickly, which definitely is the case here for First Solar, then this means there is a pretty good chance or a good probability of seeing the stock getting repelled off this point and indeed returning to lower prices. Right, so for example, as you can see over here, First Solar had a more gradual increase in price up to the underside of this trend line. And as you can see, there were many weeks where the stock was fighting repeatedly to try and get above that point, but ultimately it did fail. But then again, the next time that this stock tried to get back up to that trend line once again, it did so very, very quickly and very sharply. And so this time when the stock was repelled, it was repelled very, very swiftly as well. So again here, bottom line, I am betting that since this stock has once again just exploded back to this trend line, I'm betting that in the near future, First Solar is going to get repelled pretty harshly back down lower. And then on top of all this, a second reason why I'm betting that this stock is going to go lower pretty soon is if we go back to a daily chart real quick. Let's go to a 1-year daily chart. And then as you can see down here with this RSI indicator, let me expand this up a little bit. So this indicator tells you when a stock is likely overbought or oversold and therefore due for a correction. And so specifically, if this indicator gets above a value of 70, that's a point where the stock is considered to be overbought and likely is overdue for a short-term sell-off or a correction. And so as you can see here, for weeks, this indicator has been well above 70 and right now is at a value of 86. So again here, this is just more reasoning I'm using to justify my new trade on this stock. right? Because also looking at the past here, as you can see, when this indicator gets to a pretty high point, especially if it does cross above 70, then you oftentimes see on the chart a very significant sell-off, right? So it happened here, also happened again here. RSI was above 70, and same thing right here as well. Although in this case, the RSI did not quite get above that 70 barrier, but still pretty close. So bottom line, still no guarantees we're going to see a sell-off for the stock anytime soon, but again, I do think the odds here do favor a sell-off sometime in the near future. And so everything I've discussed so far was meant to show you what I look for in terms of a directional assumption, basically being, in this case, bearish on First Solar, but also because credit spreads and selling naked call options are, of course, option selling strategies, I do also want to find stocks where the implied volatility is higher than usual, right? And that's because implied volatility is used in part to price option contracts. So specifically, when implied volatility expands, option prices also increase as well. And then conversely, as implied volatility contracts or goes back down, option prices go back down as well. So ultimately, if the implied volatility is much higher than usual for this stock, then as an option seller, you'll be able to sell those options for much higher prices than usual. And then also, there's a pretty good chance you're going to see implied volatility come back down pretty darn soon. Right, so for the case of First Solar here, let's come down to this bottom chart, which if I expand it up a little bit, this is showing you the implied volatility for First Solar over this past 1 year. And so as you can see, the implied volatility fluctuates quite wildly as it does for pretty much every stock. And especially right now, the implied volatility has expanded quite a bit. So once again, this means that the option prices for First Solar are going to be a bit inflated for the time being. And then also, as you can see by looking at the past here, every time the implied volatility gets to a very high point, what does it do? It always comes back down. And that's because implied volatility in general is very cyclical in nature, right? So whenever it gets too high, it comes back down. And whenever it gets too low, it always comes back up. So therefore, if I sell options at around this point when their prices are pretty inflated, and then if we do see an implied volatility contraction pretty soon, that's going to decrease the prices of the options I sold. And that's exactly what I want to have happen as an option seller, right? Every time I sell options, I want the prices of those contracts to fall in value. And then on top of that, if we also see the stock move directionally in our favor, right? If First Solar does come down in price, then both of those things are going to serve to reduce the price of the options I sold and make for very quick profits. Now, one thing I will mention though is that it's pretty difficult to find stocks that have increased in price up to a point of resistance and that also have elevated implied volatility. And that's because implied volatility, generally speaking, is basically a measurement of fear or uncertainty in the market. So most people in the market are long stocks and equities in general. So when stocks go down, that's when people get more fearful and uncertain. So therefore, in those cases, during sell-offs, that's typically when you do see implied volatility expand. Whereas conversely, when stocks increase in price, as they definitely have for Solar here, oftentimes you see implied volatility go back down. But obviously here, First Solar has been the exception to that general rule, right? Because as this stock has exploded higher, implied volatility has also exploded higher as well. And so even though this is definitely not very typical, it can and will still happen if the stock does explode higher, which in the case of First Solar here, this stock definitely has. And so bottom line, the main reason why this kind of thing can still happen where the stock does explode higher and implied volatility goes higher along with it is because when stocks make huge moves in either direction, up or down, those huge moves alone can still make people more uncertain and fearful about the future, right? Because basically I think we can all agree if you have a rational way of thinking that at some point this massive rally is going to end. Right? So even though it may not happen right now, at some point it definitely will happen. This kind of explosion to the upside is just not sustainable. So again, perhaps most people in the market recognize that fact as well, and that's why you're seeing an expansion of the implied volatility. But finally here, this also means most likely that if First Solar does come back down, especially around this point, that alongside that, you're also going to see a contraction in the implied volatility. And like I said earlier, a contraction in the implied volatility plus a favorable directional move in the stock price, right? If First Solar goes back down lower, then both of those things are going to reduce the value of the options I sold, which I'll show you here in a second. And ultimately, that's going to make for very, very quick profits. So lastly, in terms of the actual trade I made, let's come over to the trade tab real quick here and take a look at the option chain for First Solar. And so as you can see here with this position flag, I chose the September 30th weekly expiration with 22 days left to go. Now, normally I would prefer to choose the monthly expirations either in September or October, but the September monthly expiration is expiring too soon, only 8 days, and the October expiration is expiring too late, 43 days. Now, that being said, generally speaking, it's still optimal to sell options with less than 45 days until expiration, and that's because at around this point, time decay does begin to accelerate. But that being said, for my preferred trading strategy, my preferred trading style basically, I like to be under 30 days until expiration. Now, unfortunately for First Solar here, its weekly expirations are not very liquid, meaning there's not many people actively trading these contracts. So ultimately, I did end up choosing the September 30th expiration just because it had the best balance of offering some decent liquidity and also some decent amount of time until expiration, which therefore would allow me to sell my options here for a pretty satisfactory credit. And so as you can see here, I sold the 145 strike naked call option and did so originally for a credit of 480 bucks. So looks like so far this contract has come down a little bit in price. So far so good on this trade. But also take note that I chose the 145 strike for a reason, and that's because I wanted to give myself a bit more cushion, so to speak, in case this stock does continue to move a little bit higher. So even though the underside of that trend line does come in at around 138 bucks per share or so, I still wanted to choose a strike above that price, right? So bottom line, as long as First Solar here stays below 145, then there's nothing I have to do to defend this trade, and I still will profit by the expiration date. And ultimately, when it comes to option selling in general, I think it's always a good idea to give yourself some cushion in case you are a little bit directionally wrong on the trade, or perhaps if you're just a bit too early when making that trade. But if in the case I'm just super dead wrong on this trade, and let's say First Solar just continues to skyrocket and goes all the way above and through my call strike here, then the way I prefer to defend these naked call option positions is to purchase 100 shares of stock if and when that happens, right? Because by doing so, I basically convert this initially naked call option into a covered call option. And therefore, it does not matter how much higher the stock goes after that point. And then eventually, if the stock does fall back down below my strike, I will sell the shares for a small loss and move on. And I do all of this actually with automated orders. So for example, if we go to the monitor tab real quick here and scroll up, you can see right here, this is basically a chain reaction of orders that will flip-flop between either buying or selling the stock if it goes above and then falls back down below my 145 call strike. Now, if you do want to see the specifics of how this all works and how exactly I create these orders in thinkorswim, I do have a separate video on that topic. So I'll post a link to it above and you can watch it later. But that being said, just to summarize here, when it does come to selling naked call options or call credit spreads, the first thing you want to look for is a stock that has reached a major obvious resistance level, especially if it has done so very quickly. And then number two, if possible, you want that stock to have much higher implied volatility than usual. Now, like I said, finding that exact combination is going to be a bit difficult, just given the relationship between how stock prices move and how implied volatility moves in most situations. So if you do find a stock that has reached a nice resistance point, but the implied volatility is very, very low, then instead of using a call credit spread, perhaps consider using a put debit spread. And if you want to see a very good example of that particular strategy in action, I've got a separate video on that topic as well, link above. And so with all that being said, that's going to do it here for this video. But of course, one last thing, as I mentioned, I've got a very cool opportunity for you guys where you can receive up to 13 free stocks. So basically, there is a newer brokerage company out there called Moomoo, which is based in Palo Alto, California. And again, for a limited time, they're offering you the opportunity to receive up to 13 free stocks when you open a brokerage account with them using my specific link in the video description below. And so the Moomoo trading platform is highly competitive with other comparable platforms like Webull and Robinhood. There are absolutely no trading fees on stock or option trades. You also get direct trading access to US, Hong Kong, and Chinese markets, which is something I have not seen being offered by competing platforms. Moomoo also comes with a free, very advanced, yet totally user-friendly trading platform that you can install on your computer or your smartphone. And of course, everything is regulated by the SEC and FINRA, so your trades and your investments are properly insured. And so if that sounds good to you, then again, use my link in the video description below to sign up and get your free stocks. And also don't forget to check out and join my options trading Discord as well as my SKILLSHARE courses. Links also in the video description. And finally here, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week and you don't want to miss out. So thanks again for watching, and I'll see you next time.